Welcome to Yahoo Finance's flagship show, Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, the government shutdown could be coming to an end. The Senate voted 60-40 on a procedural measure to advance a bill to end the shutdown. However, the Senate has yet to schedule a vote for final passage. The House also needs to approve the measure before it goes to President Trump's desk for his signature. The progress in Washington is sparking a risk-on mood in markets. U.S. stock futures moving higher as bond yields rise. The reopening of the government would allow for some clarity on economic data that the Federal Reserve will need for its interest rate decisions. Plus, investors are still keeping a close eye on earnings. Disney set to post its first quarterly adjusted earnings drop in more than 2 years. Sales seen growing at less than a fifth of the pace seen a year ago. Meanwhile, CoreWeave's results after the bell are expected to be strong after striking deals with OpenAI and Meta, but the stock has come under pressure, falling 22% last week amid the AI-driven sell-off. And stick with Yahoo Finance this week for conversations with Wall Street heavyweights and C-suite executives. We'll be covering everything from AI to crypto and the economy. All of this as part of our Yahoo Finance Invest event. We'll have Michael Saylor of Strategy, Robinhood CEO Vlad Tenev, Damon John of Shark Tank, but that's not all. We'll speak to former Federal Reserve Vice Chair Lael Brainard, Pfizer CEO Albert Bourla, and American Bitcoin co-founder Eric Trump. We've got many more guests. You can tune in this Thursday. It begins at 8 a.m. Eastern Time for a full day of market-moving conversations. Yahoo Finance Invest. You don't want to miss it. Let's get a check-in on stock futures right now. We are seeing some strength here in the futures, as we said, having to do, it looks like, with a glimmer light at the end of the tunnel, perhaps on the shutdown. The NASDAQ leading gains after the selling that we saw last week around those big tech heavyweights and AI names. NASDAQ futures pointing to a gain of about 1.5% at the open. S&P futures pointing to a percent gain, and Dow futures pointing to about a 0.4% gain. Let's dig into our top stories of the day now. The Senate advancing that measure that could pave the way to reopen the government. That has stocks rising on hopes of a deal. Plus, Disney set to report the fourth quarter earnings this week. Joining me now, Washington correspondent Ben Wershkul, senior reporter Brooke DePalma, live at the NASDAQ, and senior reporter Ali Canal. Ben, we're going to start with you. What changed that could then pave the way for the government reopening?
Yeah, morning, Julie. What changed here is that eight moderate Democrats essentially gave in and were willing to accept a shutdown deal. What this vote was a 60-40 margin, which is the bare minimum needed to break the Senate's filibuster rules. 8 Democrats joined 52 Republicans to get on board here, even as there were basically very few concessions to Democrats other than kind of a promise of a healthcare vote at some point in December. Other parts of the bill reopen the government till January 30th. Funds some programs for a full year. SNAP benefits in the Agriculture Department are on that list of what would be funded for the full year, as well as some limits on President Trump's ability to fire federal workers. The timeline here of how this gets enacted, it's still going to be a bumpy few days in terms of getting this done, but there is a clear path to ending this shutdown. Up first is the Senate. The Senate will come back into session at 11 a.m. today. Senate rules allow this to be dragged out if certain senators want it to be. So it's the timing of a final vote is very unclear, but there's a lot of energy to get this done today ahead of the Veterans Day holiday tomorrow. And then the House will have to consider it, as you mentioned. House Speaker Mike Johnson has said that he's going to give his members about 2 days to come back to Washington. That gives us a sort of guesstimate of a Wednesday timeline for when the House will be considering this. All, of course, up in the air. Mike Johnson's going to speak later this morning, so we'll probably get a little bit more clarity there. Bottom line here for markets is this is a clear path to ending this shutdown. Not 100% certain, but there's a lot of ways this gets done. But it will be a few days as the economic costs continue to be here. The airports are still going to be snarled for at least a few days.
And Ben, speaking of what's going to take a few days, normally we would be getting the consumer price index, on Thursday? Yeah. If the government opens back up, are we going to get it in time?
Nope. Okay. Bad news. That's definitely not coming. The White House has even signaled that this Thursday's release of inflation data may not just be delayed this week. It may not come entirely. This is because inflation data is gathered by having workers out monitoring prices in real time, and that obviously didn't happen last month. So inflation data is a real question mark, but definitely no new data on that front coming this week. What we are expecting to come relatively soon once this reopens, assuming this deal makes its way through, is some jobs data. The September jobs data was gathered before the government shutdown began, and then it got cut off on October 1st. That's sort of sitting there waiting to be compiled and released. So the widespread expectation there is that could be released quickly. But the fate of October data, inflation data, as well as jobs data remains very unclear. So that's going to take not only the government reopening, but federal workers being back in the office for a few days. They're all currently furloughed before we have any clarity there on that. But definitely nothing fresh for markets this week for certain.
Yeah, no, except maybe the ending to the shutdown itself.
Right,
we'll see,
right.
Ben.
Yeah,
and let's talk about what's going on in futures, Brooke, because it's very interesting. It didn't seem like the government shutdown was really weighing on stocks, but it does feel like the prospects for a reopening are maybe helping stocks.
Julie, it was largely an item on investors' agenda that they really shrugged off. But now this optimism really fueling this pre-market rally this morning, led by the NASDAQ, which saw the worst week of losses since April. Think about that Liberation Day. That was the last time that we saw a decline as much as we did last week yet again. And so this momentum this morning really fueling the NASDAQ, as you can see on your screen, up about 1.5% in this pre-market trading, followed by the S&P 500 and the Dow. And there really is this optimism that, yes, the government shutdown could end, but also optimism around that potential return of that economic data that could fuel the Fed's decision. Also, consumer sentiment hit a nearly 3-year low. Potentially this back pay that these furloughed federal workers could receive could then provide a boost, especially ahead of that key holiday season. And also, this is a market where tech is really keying the momentum here, and we are expected to hear from CoreWeave this week.
Yes, we are. And meanwhile, if you zoom out and look at the index level, we're seeing some new forecasts, some bullish forecasts from some folks on the street.
We sure are. There is more bullishness on the street. This morning, UBS said that it sees the S&P 500 hitting 7,500 by year-end 2026. They said that would be fueled by this AI tech rally as corporate earnings and gains in a concentrated but resilient tech sector continue. Also, we're getting some calls from Morgan Stanley as well. Morgan Stanley, Michael Wilson, saying that corporate earnings will power the U.S. stock rally. And also within that note, the S&P 500, worth noting here, that they are posting a nearly 15% jump in third quarter profits. That's according to Bloomberg Intelligence. And also Oppenheimer calling out this morning that these recent declines have been just a trim and not necessarily an ongoing expectation or the beginning of major declines ahead. And so lots of momentum this morning that's really keying into this pre-market rally.
You know, it's funny, Ali, we keep hearing from strategists, yes, of course, they're paying attention to the macro stuff, but we keep hearing over and over again, earnings strength is what is driving this market. And in terms of, you know, we're through the thick part of earnings season, but we still have some big ones this week, including Disney, which is on your beat. So what should we be looking for there?
Yeah, well, it's interesting because Disney usually has these really strong results, but we are expected to see a step back in profit this quarter, along with a much slower pace of revenue growth. So earnings expected to come in at $1.04 a share. That's down from $1.14 1 year ago. Revenue is expected to tick up just around 1% to $22.8 billion. Now, if you look at the various revenue sectors that make up this company, remember, Disney is not just a pure play streaming company or a pure play parks business. It really has this synergy that makes the company tick. The parks business is expected to be strong. Now, that does include cruises. It continues to remain one of the bright spots for this company. Revenue expected to rise about 7% to $8.8 billion. This comes after strong international travel and higher pricing that's expected to help offset some of that competition from Universal's Epic Universe, and that opened up in May of this year. And while the new Disney Adventure cruise ship that has been delayed until March, cruises are largely still expected to be a major growth driver heading into 2026. So I expect some more color on that on the earnings call. Now, streaming, as with all these media companies, continuously front and center there. Disney Plus subscribers are expected to come in at a total of 130 million. We have seen price increases across the various Disney streaming properties between 10 to as much as 20% So that is all in the name of chasing these profits, having more sustained margins within the streaming business, which has been a big focus point for CEO Bob Iger. Now that push is expected to help margins heading into 2026, along with a strong content slate. And then finally, with sports, that continues to stand out. We have early demand for the new ESPN streaming service that has been strong. Again, on the earnings call, I would expect analysts to ask a lot of questions about the ESPN direct-to-consumer platform. How is it performing as we continue to see the NFL season move along? And then I mentioned Bob Iger, and that, of course, is in the background. Who is going to take over for Bob Iger's position? He is expected to step down at the start of 2026. So this could be the last earnings report that we get without knowing who that next successor will be. So that's going to be a big, big topic point for investors.
Yes, the one that won't go away. Allie, thanks so much. Thanks to Ben and Brooke as well. Coming up on Morning Brief, we'll bring you today's top trading tickers and count you down to the opening bell. Stay tuned. Now time for some of today's trending tickers. We are watching Pfizer, Monday.com, and Instacart. First up is Pfizer, winning its bidding war against Novo Nordisk for obesity startup Metsera. That win coming after Novo bowed out amid regulatory opposition. Metsera cited a call from the FTC regarding potential risks from proceeding with the proposed Novo deal structure. Pfizer had already secured that FTC clearance for its bid. Pfizer has agreed to pay up to $10 billion for the company. Next up, Monday.com. Those shares are plunging after the software company narrowed its revenue forecast. The fourth quarter guidance overshadowed stronger than forecast third quarter results. Monday.com now sees revenue between $328 million and $330 million. The estimate was for above $333 million. And finally, Instacart, topping third quarter earnings estimates and issuing an upbeat outlook. The results indicate the demand for its core grocery delivery service has been holding strong. Instacart said affordability initiatives remain key to retaining customers. The company is also under new management. Chris Rogers took over for Fiji Simo earlier this year. After that executive departed to work for OpenAI, the share's up about 7%. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, Billy Joel told us to appreciate life through his lyrics. These are the times to remember, because it will not last forever. Our next guest says those lyrics also apply to the recent run-up in the stock market. I'm not sure we're viewing it through the same sort of filter of nostalgia and joy, however. Joining us now, Michael O'Rourke, JonesTrading chief market strategist, who quoted those lyrics in a recent note. Mike, when we look at what's going on in these markets, I mean, you've been doing this for a long time. I've been doing this for a long time. What stands out to you as particularly unique, unusual, and maybe cause for good and bad signals right now?
Well, obviously, there's a lot of parallels between the internet bubble and AI. Obviously, there are groundbreaking technologies that are going to change the way the world works. There's no doubt about that. But of course, foundational in creating a bubble is something that's a widely held belief that is factually believed to be a correct and bullish and optimistic. So that fuels it. As far as the note the other night when I talked about that, it's when you start seeing things that are really out of the ordinary or atypical that you'd really be surprised to hear people say or do. It's when I think you should really be concerned. So the example I used from 2000, there was someone talked about Cisco, whose market cap at the time was about $300 billion, was going to be the first $1 trillion company. And that was definitely a very serious conversation being had at the time. And then InfoSpace, which was a smaller company, the CEO said they're going to be a $1 trillion company. Things like that were so far. I mean, the largest market cap at the time was probably $480 billion. So then you see episodes like today, whether it's OpenAI talking about getting the government to backstop, federally backstop chip investments, whether it's Elon Musk getting $1 trillion pay package. Things like that are very atypical and you wouldn't expect to hear in a conventional investing environment.
But as you say, like in context, They make sense, right? There is an argument to be made that these things do make sense. And I have to say, Mike, most of the people we're talking to are saying, it's not really a bubble. It feels a little bubbly, but it is not a bubble because unlike in the .com era, these companies make money, et cetera. What would you say about that?
In the .com era, a lot of companies made money as well.
Right.
And coming out of the .com era, Amazon has been by far the most successful company. That still did not, stop its stock from declining more than 90% after the bubble busted. So, and then you can talk about the Intels, the Ciscos, the Microsofts, not the Pets.coms of the world. Those companies all had their shares decline, 60 to 90%.
So Mike, what's the Pets.com? What's the InfoSpace? What are those companies now?
Oh, there's so many small, whether you want to call them AI companies that rally on news and headlines, with whether they're citing AI, whether they're citing partnerships. But the thing is, we won't know them until they bust. I guess the point I'm trying to make, even the highest quality names that have great fundamental businesses are still going to be at risk to any type of bubble busting. And I think one of the things that people failed to realize back in 2000, companies were still reporting earnings growth and revenue growth into the end of the year. It wasn't all of a sudden the business stopped. And that, there was a lot, they saw fundamental strength because their customers were double ordering equipment and things like that. And, we see similar things today where you have companies announcing, it's actually even more extreme because you have whether these, $100 billion orders going into, whether it's NVIDIA, the hyperscalers, from companies that don't have that big a history or that much revenue. So there are questions about the environment we're in where you can't look at these, the Mag 7 names and their backlogs and sit there and say you have 100% confidence that that backlog is going to come through and those bills are going to be paid down the line.
So, Mike, when we saw the .com bubble burst, we were in a Federal Reserve tightening environment. Now we're in a loosening environment. I'm curious what you think the sort of candidates are for a catalyst, if this is a bubble, for it to burst.
All it takes is a deceleration of the headlines, the stories, the growth. For example, you have Taiwan Semi reported its October sales last night, and they're up 16.9% year over year. Now, granted, it's on much larger numbers, and of course, NVIDIA over the weekend talked about ordering, more chips. But you're going to see these growth rates decelerate, and again, after having well over $1 trillion in deals announced in the past few months, and again, this is kind of a one-time build out or the initial build out for these structures, right? At that point, what are the growth rates going to be going forward? You're going to see those decelerate. And again, if you recall back to 2000, there wasn't a headline or a story that, the market peaked on. It, ran out of momentum. And I guess that's the risk here is you see these growth rates slow down. You see these headlines about hundreds of billion dollars of deals slow down. And then people will start questioning the momentum behind the trades.
So as you know, Mike, it's tough to time the market of when that could happen, right? But are you taking steps now or recommending the folks take steps now to try to insulate against that? And what do you do?
So with a bubble, it's hard to know when a bubble is going to pop or when it's going to peak. Now, again, I'm in the camp where I'm convinced we're in a bubble. What I do know is when you buy during that bubble and you build positions during that bubble, those usually turn out to be losers. So again, maybe you're not selling what you have, the names you have now, and maybe you're not liquidating your portfolio. But I'd be very cautious in adding to positions at bad price, what I would perceive to be bad prices. And I think that's the best way, you could protect yourself. And even though, you said we're in a Fed easing environment, but that remains in question as to whether the Fed's going to lower rates next month. And also, you're talking about, the 10-year yield is at 4%. That's a pretty healthy, yield for Treasury bonds for, risk-free income. So I think there's places to be more defensive. And then again, I'd wait till valuations become more attractive and let some of this storyline subside. We've had a phenomenal 43% rally off the April lows. We're heading into year end. I mean, it's a great time for investors to say, hey, it's been a great year, and I'm going to move to the sidelines for a little while.
Mike, bringing some fire today. Great to see you. Thanks so much for being
Likewise.
with us. Thanks. Coming up on Yahoo Finance, always also bringing the fire, Brian Zazi and opening bid. Zaz, what's coming up?
All fire, all the time, Julie. We're going to dive into the government shutdown, talk some AI bubble fears. Going to look at why the stock market has been up so much this year, yet the average American isn't really feeling it. And of course, Julie, I'm playing hype man for all things invest here on Thursday, November 13th. The tie's on, the suit's on. I mean business.
Oh, is that? I was wondering why the suit was on today. That
all
explains
business.
It.
All fire, Julie.
All right, thanks, Zaz. That does it for Morning Brief. Opening bid is next.